Okay.
Perfect. So I just want to quickly okay, perfect. There we go. Your host.
Okay. Thank you. Cheers. Go well.
Yeah.
Cheers, mate. Bye. Morning, morning, morning. I see a new name up there, Pitsy. I don't know if you've been here before. If you haven't, my name is Roger, Quick Trade Support. Just hang on, just connect here. But sorry, Pitsy, hi. I'm not sure you've been here before, but just in case you haven't, my name is Roger, Quick Trade Support. And just let this guy in here. Okay. Yeah, and here to host the trading room, and here we discuss trading ideas and interact and hopefully learn something about the practical areas of trading. Just to get a little tip, keep a pen and paper handy. Any question you want to ask, interact by putting on the live chat or the meeting chat, that is, or you can unmute and discuss it. And yeah, we'll take a couple of notes, etc. And hopefully we can gain some value. So that's basically how it works. It's a forum. We all join in. It's not a class like your stock market college forex classes they have in the evenings. It's a forum where we discuss the practical areas. So if you're just right at the beginning, you basically you haven't got any knowledge at all of what a lot size is or any basics whatsoever, you might find a bit confusing. So it might be an idea, therefore, to get platform training sorted so you can operate the platform, do a couple of forex classes on tonight and Thursday, and then hopefully by Monday you'll be ready to rock and roll and join us in the trade room if you get confused. If not, please stay with us. But this is ongoing. You're not going to learn it all in one class. It's an ongoing scenario. Okay, hope that's all clear. I'm just going to let these guys in and now transfer over to the charts. One moment. Sorry, I've just been asked to just do this to start off with, introduce myself, because often you get a couple of new guys coming in who don't know where, why, or what, so just trying to explain the format, and then hopefully we can take it from there. Okay, right. Just wait another minute or so, 1:30 we'll start. Don't forget, you can unmute as well as ask any question on the meeting. Remember, trading ideas come first. You want to check a trade out or trade you're in, that comes first. When we got moments in between, we can discuss fundamentals and other aspects or questions or what that funny blue line is on there or whatever. Okay. Just remember, just sitting there, hope it's going to be downloaded into your head. Like a computer won't work. You need to interact, take notes, so you get the hang of what's going on. Okay, I'll pass. We can get started. Okay, right. The markets are going to be a little bit scary, I think, for the next few days or so. First of all, we've all heard now of the Hamas attack in Israel. Whether your personal political beliefs, just put them aside. What it is going to create is some market, shall we say, volatility. That's the word. It's going to create some market volatility depending how people react to it. So just bear that in mind. When you get market volatility, it just often means things will happen price action wise that don't always make a lot of rational sense. It means emotions may be taken over. Okay, so just be aware of that. I just quite amused yesterday listening on 7022 Money Talk, and Bruce Whitfield, he's the host on there, and he said it looks like it's a bit of risk on when asked a question about the markets for the day. He says, looks like a lot of risk on is coming. And if anyone doesn't know what risk on means, he said it's not me, but I agree with him. He said what it means is the analysts have no idea, haven't got a cooking clue. So they come up with a fancy word, says risk on or risk off. Sounds good, doesn't it? but it means they don't know. I thought that was quite well put. So if the analysts don't know, let's be honest, don't feel too uncomfortable if you're not sure. And I say I'm too uncomfortable, I don't. What's going to happen is not just what's happened to the war, obviously, or the attack. It's the reaction to it. If the mainstream media go berserk in the way they report it, it might get a lot of emotions going. We'll have a bit more of a knee-jerk reaction, depending on the the responsibility how they report it. But the bottom line is, it is having a lot of effect on it. Now, I remember for Americans, the fundamentals a rather embarrassing situation because their culture has gone very strongly Democrat to progressive woke left. Now they've got and they're big supporters of Israel. The problem with that is Benjamin Netanyahu is to the right of the Republican Party. So they've got a rather embarrassing thing. They're pro-Israel, but their narrative is very much opposed to the democratic narrative which is going at the moment in America. So it's causing a bit of embarrassment and a few issues. In the UK, it's even a worse situation because they've got a large amount of Muslim people living there who are pretty anti-Israel as well. So they've got to be a little bit careful. And remember, going back when Israel became independent and its own got its own country within the Palestinian borders just after 1947, just after the Second World War, Britain actually abstained, didn't vote one way or the other, it abstained. And the history, they've been fairly pro-Arab. So they're another bit of an awkward situation as well. So that coming together with powerful Western nations playing political tiptoe and people obviously dying over there. And remember, from what I've heard in the Gaza Strip there, they put a big rope around it and the conditions there are terrible. The problem the people are suffering, of course, like the old defenseless guys, probably have a clue what's going on anyway. The ones that are causing it sitting back out the bloody way there, probably fairly comes off with a good plate of food in front of them, but that's another story. But the bottom line is, how's it going to affect us in the market sitting all this way away? The answer is I haven't a cooking clue. And I suggest you don't try and get too cute either. It's all guesswork at the moment. Combining with that issue as well, it's not a good negative way to start the old trading room off, eh? But at least we've got to face some reality here. We've got the producer price index in the US coming out at 2:30, and that could affect US dollar, gold, and the shares and the indices. Okay, and to a certain extent, maybe the Canadian and maybe some of the other ones, but those are primary ones aforementioned. Number two, 2:30 tomorrow, we got an even bigger one, which we will be doing as usual. The straddle trade session from 2 till 3, and that's the US consumer price index coming out tomorrow. So these are uncontrollable economic fundamentals coming out with the war thing. Well, war is a big word, but the attack, probably the better way of describing it, going out in the Middle East with all the tension there, plus all that damn oil there, which we want, basically. Let's not be too cute about this. We want that damn oil. It's causing a lot of uncertainty in the markets and a lot of, go figure, as I call it, go figure. So expect very difficult to call direction at the moment. Even a weak against the strong, they're all seem to be tumbling all over the place. Just bear that in mind. Okay, I hope we don't get too narratives. Everyone's got their own particular beliefs. We're not talking about that. We're just talking about affecting the markets. So don't take any offense to what I'm saying. I'm just trying to see as it is. And remember, we don't know how it's going to affect. And even a lot of these analysts have no idea, so don't expect you and I to. Okay, a lot of guesswork for everyone at the moment. Okay, now what was sent out? A couple of trades. What was sent out? We'll start with NZD USD. I think it was the only one that sent out. NZD USD. I'll discuss another one in a moment. We'll start off with this one. Now, those a member of my VIP WhatsApp group might have noticed I didn't post it there. The reason why I didn't post it there, I came up with an idea to look at. If you guys in the office want to send it out to your company, you're the broker, you can. Why I didn't, because it's my VIP group, why did I not then post it on mine? Not saying it's wrong. I'm just saying my slight worry. So I thought I'll wait, discuss it with you guys. We got some guys in here like Brian and Anthony and Gerard and Christopher, and the guys traded a couple of times before. Madiri. Is Edwin there? Not yet. But anyway, there's a few guys traded before. So I just need a little bit of moral support on this if you want me to put up my VIP group. So what is my hesitation? I still think the dollar is stronger than NZD. It held there on the 100-day. So I was thinking of a range trade of maybe a stop up there We can't get a risk reward down there, so I maybe looked at a stop down there somewhere. So, and now there was a sell on that one. Why I'm a bit hesitant is a couple of reasons. First of all, we could get a couple of problems there, a hurdle there before it gets TP. If you put the TPs there, you don't get a risk reward. The other aspect, which is the major one, I am nervous about the Middle East issue, which will affect the dollar, even though NZT to a certain extent, but more the dollar, and most important, the two major fundamentals coming out later on today and tomorrow. That's why I was a little bit hesitant to post on my group. But if you like it and you get 4 or 5 people there who have traded before, I mean, who've got some idea why they're doing it, think it's a better idea than not, then I might have the incentive then to post it on my group. So there you are. What do you think of this particular trade as a short? Okay, I've given my side of it. I want to use the trading room today amongst trading ideas for normal and other things to discuss this amongst others so we can all learn from it. So who would like to kick the ball off and give some comment? Now, just a second. I haven't read yours, I just want to mention something Gerard made there. It's a very good point. He came out there. He says, I like it, but I will move my stop loss closer to when the fund is about to come out. In other words, he knows now it's 9:30. 9 and 5 is 14. So there's 5 hours to go, just under 5 hours to go before the release. Okay, so he says he sees some downside. Once he gets to a bit of profit, if he's in a bit of a profit, he can modify his stop loss. Even if it's a bit close, he gets stopped out in the noise. He hasn't lost, but at least he has no risk going into the fundamentals. And if it comes in the favor, which it might do, he can make a profit. So the beauty of that kind of thinking, because that's exactly what he's doing. He's thinking, which I wish everyone could do, make it a lot easier life. We could all think a little bit. He's thinking that I could, once I've taken a bit of initial risk, get it into a profit, and then I'm covered. I might make nothing or I might make something. And that's an ideal situation to be in. And that, I think, is a pretty good selling point to come up with there. I'm going to read the next one now. Fund is 5 hours. We might get, but it's another point is it's not just close 5 hours. Another point I thought of, there's 5 hours and 5 hours. This is a daily chart. Look at that candle. This is a daily chart. Look at that candle. Both the day are very different. It might be a bit quiet going forward because people might just a moment might be a little bit circumspect to trading before it comes up. So you might get that's your other risk here on company. You might get a bit of sideways movement. So if you put a close stop loss in, it's not even a profit as yet. That there's always going to be some yin as well as a yang, if you get my point. But otherwise, it's not a bad idea. Go on, mentor. That's fine. Okay. Fund is to close. Okay. Too close. What you mean? Yeah. Fund is too close. If you feel that way, I'm just checking it out there. So people who are thinking there can say, yeah, I'm willing to take that risk, but it's an evaluated risk. That's why I'm sometimes comfortable sending stuff up because they're going in blindly without a clue what's going on, why, where, or what. And they don't stand. One is more aggressive. One's a range trade, blah, blah, blah. Adjust stop losses accordingly or adjust volumes accordingly because it's slightly higher risk than the other. They're just going in blindly and it comes back and bites. And well, I like it. I do feel a bit responsible, and which I don't like having. So that's why I'm chucking it out there. But I'm getting right to think it's not a question just getting a signal, pushing the button, and away you go. Okay, it is a lot more to it. If it wasn't, there'd be no unemployment in the world. We'd all be rich. It's that easy. And remember, it's impossible anyway, because every time someone wins, someone's got to lose. If it's easier that, I'd like to meet the people who actually lost on it. They would make an amoeba seem clever. But anyway, it's another story. You can certainly speak. It's unmuted. Go for it. Go on, go for it. You want to speak? Please speak. Time is, time is moving. Time is money. Speak. Go for it. Mustafila, please. You said you want to speak? With pleasure. Please speak. We're holding up the trading room here. Yeah, I think Gulf is bearing. Yeah. Plus it's hit the 50-day moving averages, the 100-day moving average is holding. And I see some dollar strength coming forward. This is the pullback on the dollar before I expect more dollar strength. So engulfing candle is just a confirmation. That's not a trade signal on its own. I'm saying it's the fundamental worry I've got. Fundamental push the technicals out. Remember, fundamental override. If a bomb goes off in the Pentagon, forget the technicals. You know what I'm saying? But I hear you. Okay. So what do you think, guys? Do you think it's worth taking? I think in this case, I want 5 people to support it, and that'll give me enough courage to say, put on the group, but just be a little bit, don't be too aggressive, your volume size. Good stuff, Umpo. Who like it? Who liked it? Who like it? Okay, we've got 2 guys. Can we have a couple more who like it? I'm going to put a pretty tight stop on this. 50 pips. Take it down there somewhere. Okay, 1, 2, 3. Anybody else like it? Just give me a little bit more moral support. Anybody else like it? One more person. Okay, all right, I'll put it out then. Just give me a second. Just give me a moment. Give me a second. Sorry, guys, I'm reading just now. You have to mute your bit of a background racket there. Second. Sorry, guys. If you want to speak, just let me know. Okay. Morning, everyone. Just joined, so I have no clue of what's the question to update Zoom. So as I check the news, it indicates that the yen has weakened the dollar and the US has wasted billions of dollars trying to cover last week's drought. So we should, yeah, sell on what? Weaken the dollar. You think it's going to be a sell-off on the dollar? Then you need to go to the live chat. This is a trading room. I deal with trading. Anything to do with the open accounts, that's your account manager, intermediary job. And anything to do with the technical side, you go to the live chat. So go to live chat, technical support, or yeah, that's probably the best bet. And they'll try and chuck it around to see if they can sort you out. Okay. I'm still not quite clear. So, Empo, what do you mean by that? You think it's going to be a weakness of the dollar and a strength of the NZD? Not actually too clear on that. What do you think? What do you say? Just a second. That's what I thought you meant. Okay. No, if that's the case, it looks like that's the case. But I don't know. News is usually discounted the markets when released. These are all analytical opinions. Where we have to watch the news is be aware of it before the release because it will have effect on the market. Well, some will be fairly like 2-star. You know what I'm saying, or 1-star, or half a star. But be a little bit worried. Try to trade on some analyst prediction. Just be a little bit careful of that because they write for newspapers. Nothing wrong with them, but they're going a broader, wider picture. They're often journalists. They might know their stuff, but they might always qualify to advise. They can't, so just give out broader pictures, and it's usually fairly long term to cover their backside. To be honest, we're doing sort of quite intense shorter term areas here, so it's a little bit more difficult to say the least. Okay. Okay, just bear that in mind. Okay. That's why on TV, always long term. Very few people do. It used to be what you call it, Traders Corner. He's gone to the UK now, Garth McKenzie, but he was about the only one that did it on the TV, Business Day actually, because none of the other guys want to take the risk in the short term. They'd rather do longer term, because then if it goes wrong, people have forgotten about it. You know, excuse the cynicism, but yeah. Okay, so the shorter term, you're asked on the line continually. Most people don't want to do that. Anyway, I'm talking about fundamentals. You still need to watch what's happening, but remember when it has happened, it's discounted the market. Everyone knows about it, so it's a bit late to react on it. You've got to act on something before everybody knows. Then once everyone knows, the price, everything discounted the market. So if you start looking for no-brainers, you're not going to find them. You get lucky or you don't. You know what I mean? But having said that, I'm just going to give me a second. Just put up the economic calendar for you because I'm sure one or two people don't have it. Investing.com. I assume you all got that, but if you haven't, it's an app. Go and get it. You can put on your laptop, and it's an app you can put on your phone as well. As long as you know how to make use of it, obviously. A lot of guys get these things, they don't know how to make use of it. It's no good look at the properties, you don't understand what they actually represent. But investing.com is quite useful. In fact, very useful. It's excellent. That's the dollar index, DXY referred to it as. That's the code. And this is the yields on the 10-year US 10-year Treasury bond or note. All important. Put my name down. I think most have it, but if you don't, you do now. Roger Trading Support. 061-529-3431. There you are. Please use WhatsApp. Right. On that subject, I just want to mention that I get a lot of calls there saying, glad to have your number. Please teach me how to trade. My job is not to teach you how to trade, especially not on the WhatsApp. My job is to advise and assist with trading ideas for those who've done, number one, platform, which you go to platform training, and number two, gone to a couple of classes and you know, in other words, understand a little bit. It's not a question of just started, I'm going to put a couple of grand in, I want you to help me make lots and lots of money. No, it's I advise the person, but it's their money and their responsibility. You know what I mean? It's not, I'm not doing it for you. You get the idea. It's your responsibility to learn those things. And then with enough knowledge, you'll act on the advice you get. And some you might agree with, some you might not. But it's still your choice. If you go for a trade idea or a signal, it doesn't work out for you and you overdid it, that is your choice. You know, you can't blame us. We do our best. But I mean, if you overdo it or you don't, you check it out. Just blindly going in without knowing volume size or modifying stop loss or anything, it's not going to work. It's too simplified, and it's more to it than that. So make sure you understand where your responsibilities lie and where ours do as well. I'll do my best to help, but don't call me up. You've got 400 rand in your account. Expect me to do an hour Zoom with you. I'm honest, it's not worth it to the company, never mind myself, because it costs the company more to pay me to do it than any brokerage will ever make you on such a tiny amount of money. So you've got to think on these sort of levels, what's in it for both sides of the coin. And we try and help each other on that basis. Having said that, I've got the dollar index in front of me. It's need to be coming off as we speak. You might be quite right in that bit of news. We shall see what we shall see anyway. I personally think a lot's going on at the moment where they don't want to make about this attack in Israel. And so it's certainly yesterday, a lot of the analysts say it's up in the air. That's why we get such extreme volatility, which means volatility is jumping up and down like a cat on a hot tin roof. And it's very difficult to call in that situation. And a lot of strange things happen. A weak becomes a strong becomes a weak, and it changes its mind a few hours later, and it drives you insane. So be careful of your volumes and just be circumspect when these sort of, shall we say, political and warlike times out there. Okay. Hope we're all clear on that. Okay. So if you've got 2,500 rand or more, or you have, 2,500 rand or more, then you can WhatsApp me and I'll make you a member and I'll upload to a member of my VIP WhatsApp group. And you get signals posted on there, daily more economic updates and other areas of interest. Okay. If you got 200 or 300 in there, sorry, don't call me. I'll call you because you will not make money. I had a person with 40 rand yesterday. I'm wondering why our spread's so high and she couldn't make money. Not only our spread's being high, you can't make money because you're trying to attack the tank with a bloody pea shooter. You're undercapitalized. And if you can't realize commonsensically that is the issue, you've got to question whether trading is for you. You know, common sense should tell you that, you know, nothing to do with having knowledge of the market or not. You know, you can't even buy a hamburger with that. And you want to go and attack $1 trillion market. I mean, you know, common sense should say this is ridiculous. Can't get something out if you don't put something in. It seems to be difficult to get this concept across, but I'm going to continue trying. Okay, harsh or not, it's reality. Save you the $40 you got anyway. Oh, she did say it's quite amusing. I'm have to take my business to another broker. I'm sorry, a lot of our brokers will want it anyway, you know, because it's no value. Okay, right. Going back to NZD USD, it's still hovering around. Dollar C is just popping up and down. We're not getting much direction. So make sure it's not over. You've got your calculator. There it is. Make sure you got your calculator. If you haven't, go to the live chat and get it. And make sure your volumes may be a little bit more conserved than normal. And this is quite aggressive because I quite like the trade on its own. My only worry is those two big fundamentals coming out. So if it goes awry, we don't want tears. Okay. If it goes well, what a pleasure. Well, the NAS, I'm going to be quite honest with you, not very big. I've taken a couple of small positions in the NAS and actually one in the Dow as well, but very small because I'm expecting some downside. But that could go pear-shaped easily if it gets good news for the NAS, which means a weaker dollar coming out on the fundamentals. So just bear that in mind. If you want to do it, you can, but bear that in mind. So be crucial, you have a stop loss crucial, you have the correct volume. So if it goes pear-shaped, it's not going to damage your account irreparably. That's the way you should be thinking. From next day's trade, we're still in it. I think it was 275. I took it as well. I took another one, the Dow this morning, but very small to follow it. But maybe suggest you don't get too cute there. But bottom line is it's another 125 pips away the stop. Just hang on. You worked out your volumes. You're doing it properly. I'm pretty sure, Gerard, you have. Let it run. If you're stopped out, you're not going to hurt you because you knew the score. And if it works out favorably, what a smile. That's the best way I can put it across. Okay. But stick with it, basically. Yeah. I'm not sure it's going to be much movement going into R+2. The American market's not even open till R+3 anyway, after the event release. So it might be pretty sideways, but if it starts coming off again, I don't think you get it. I don't think it's going to move enough to get you much profit to modify your stop. I think just leave the bloody thing and keep your fingers crossed. Okay. AUD CAD, I shouldn't really be telling you this, by the way. So I don't want you to make a habit of it. It's my money, and I'm going to be honest with you, I did do that. I went in again. Don't want to get encouraged going in again, revenge trading. When you've been doing it a while, you can sometimes break the rules because it's not just emotion. There's a bit of rationale behind it. But I got stopped out because I use the same stop. I don't get cute. The stop that you use, I use myself because they come from me. Not one rule for you and one rule for me. However, I got stopped out and I did enter again. I think it was around about 87, 28, 29, something about where it is again. I still believe when sense prevails, the Canadian will outdo the Aussie, well, at least for the next week or two. Whether that changes after, I do not know, but I'm still backing personally the Canadian over the Aussie. That's why I'm buying the CAD. So I sold this one. I went in again. I got stopped out, but I didn't go into bigger one. I got my my percentage risk correct, and so I took a knock, but it didn't hurt. Annoyed, but it didn't hurt and I decided to do it again. Okay, whether that's right or wrong, time will see. Okay, I'm got to be very clear about what I say here because you guys come in. Oh, Roger, I'm going to do it again. They get knocked twice, then it's all my fault. They're not. They're jumping in without fully understanding. If you want to do it again, I have. I'm being honest with you, I have. But bear in mind, it might not work out, and you're going to take 2 knocks. So if you go in again, just be a little bit circumspect and remember it's your responsibility. My job is to advise, but not to do it for you. There's a massive difference between the two. Remember that. Okay. I think it's one of the problems of the West, eh? They think the government is responsible for running their lives. No, it isn't. You are. Okay, so there we are. Any questions, guys? Don't forget, no PPI session today. Just be aware of it. There will be a session tomorrow at 2 o'clock where we do our straddle trade. If anyone wants to join us on the trading room Zoom ID, just bear that in mind. Please, if you do join, we have restricted 100 people. We don't want people who can't get in because they're stuck in traffic to get back to their laptop or whatever, and they want to trade it and they can't because somebody with a demo account with 100 rand in their account is sitting there. No, you're taking up space. I'm sorry, guys, you are. So if you haven't got any money or you've got a demo account, don't rather learn about it other areas. It's those who have enough money to be able to make use of the trading session. I'm not doing it just for the fun of it. It's the idea is to try and make a couple of bucks out of it, which you can't on demos or with 100 rand. You know what I mean? We must get this across to people. If you're trading with few hundred rand, you're wasting, never mind our time, you waste your own. It ain't gonna happen. Never mind what other people say. It ain't gonna happen. You're absolutely underarmed. You don't have the armament. Hope I'm not being too harsh there, Chris, but I think it's, for their own sake as well, because that little bit they've got could, it's not fair. Okay, any questions? It is, yeah. Plus, it's for their own sake as well, Chris. Because they come full of hope, and and the reality is going to kick in. Always remember it's a zero-sum game. Every time somebody loses, somebody's won. Who do you think is likely to win? You with no money, no knowledge, not proper equipment, or the guy who's got the money, the knowledge, and the equipment. That's why we have the training. We have all this help. And again, people buy the Stock My College package and only have tiny, tiny percent even attend any of the classes. How on earth can you possibly become a doctor if you don't even go to college, after you bought the course? It's a real eye opener, I tell you. If you're behind the scenes here, it's extraordinary, in fact. Anything else you want to discuss? Got the straddle trade coming up. You got the number. You got the economic calendar. I take you all know the different moving averages: the 200, the 100, the 50, and the 10. I suggest you get them, save them, and use them as areas of filters, support resistance. It'll make your trading life a lot easier than hordes of complicated algorithmic indicators which lag the price action anyway. Okay, so interacting. So I presume you've got all that. Okay. Any trades you'd like to look at? Have you? I went through the lot today, and I couldn't find anything really that is jumping at me, say, "Hey, buy or sell me." You know what I mean? Have you found anything we want worth looking at? You said, look at it. If it comes up with a no trade, at least we discussed it. We can learn from it. Even decide not to trade it. Oh, talk about in right. NGAS. Okay. Yeah, I've been saying this for quite a while. I do see upside. There's much doubt about that. It's got a bit of resistance here. Yeah, if you want to do it, and you've got enough money to sit in it, it might be slow. It's been quick the last couple of weeks. I give you that, but that's not the usual. Okay. Maybe a pullback to 3.32 for more upside, or do you want to join it now? I'm not keen on MGAS. That's for the record here. But doesn't mean to say because I'm not keen. I mean, I might not keen on Audis. I might be keen on, I don't know, Toyota. That's just me personally. I don't know, but do people want to go to market? There's a bit of resistance there. Do you want to buy a pullback? But I suggest if you're limited in your balance, I wouldn't do it because you could be stuck in this for quite a while. It's quite slow. Normally, it might suddenly perk up and shoot up through political movements outside in the world out there, where suddenly have a demand for it. I don't know, but normally speaking, it can be quite slow. So prepare to be in that trade. And if you haven't got much free margin, you don't want to be stuck in something for 6 weeks and you can't, but it will get out of. Or you can, but then you can't trade. Okay, I'll come to that in a moment. Megan, with pleasure. Thanks for asking. Gerard, okay, so anybody want to do an NGAS trade at market or a pullback or at all? Well, you should be doing okay. I presume you're long. I'd be staggered if you're short. In fact, I'd take the mickey out of you, Gerard, if you're short. Quite frankly, in front of everybody. No, I mean, you know the score, so I'm teasing you. Of course, you went long in a small amount. I wouldn't tease you if you didn't know what you're doing. That would be bullying, you know. It's my pension. Oh my goodness. I'm too young to worry about pensions, so I'm not worried about that. Don't you start laughing now. Yeah, I'm retiring 35. It'll be 21:35. Okay, well, we got my feedback and gas. Okay, what was that question? What's between the 100 and the NAS Micro? Very simple. They're both NAS 100. The Nasdaq 100 is just it's a benchmark index of 100 shares on the US stock market. Not all, but predominantly tech shares, technical shares like, I don't know, Netflix, Tesla, Meta, Apple, you know the score. Right. That's basically it. Right. What is the difference? Quite simply this. Let's take the normal Nasdaq, this one here. Let's just look at this, right? That's the normal NAS. It's exactly the same price as the other one. You can see that exactly the same. What is the difference? You highlight it, you right click, and then you left click on specification. The contract value on this is 10. You see that? Contract value 10. I want a short as well, Maraping. I'm not going to at the moment. We've all got an NZD USD out to start going in again on the USD at the moment. I'm a tad worried with the fundies coming out, but we'll look at the moment. But my knee-jerk reaction, to be honest, to say rather not get too heavily involved in one currency at the best of times. Never mind with major fundies coming out. Okay. Okay, have you got that? Contract size 10. Now let's go to the micro. There's the micro. Look, exactly the same. NASDAQ 100. What is the difference? Right click, specification, contract size 1. So one is contract size 10, one is contract size 1. So clearly 0.01 on the other is 10 times the risk and size of 0.01 or 1 micro on this particular one. Why is it there? It's to give people with smaller accounts the chance to trade the indices. Before, they were trading indices without realizing they were overexposing because it's extremely volatile. You can go with a 60, 50, 70, 80, 90 pip stop quite normally on a Forex pair. When you're dealing with the NAS, you need 200, sometimes 300. In the Dow, often 250, 350, sometimes even 400. Now you're talking several thousand rand, well, you're talking several hundred rand risk per micro, which are guys, unless they've got 5, 6, 8, 9, 10 grand their account, it's going to be overexposed. It's just giving a chance with small accounts to do it. So that's the good part. What's the negative part, of course, is the returns you make will therefore be 10 times smaller because it's 10 times a lower position. But if you've got a small account, you're going to make obviously much smaller returns, common sense. But that's the design behind it. Are we all good with that? Do you understand what I mean? If I'm not explaining it properly, no problems. I'm sure maybe Gerard or somebody can explain it, but that's what it's about. Are we good with that? Megan, does that make sense? If it doesn't, just ask again and we'll try and make, because it's important. We don't want to go and done. If you got, I don't know how much money you got in your account. If you got about 15, you know the score, you wouldn't bother the micro. But even if you got 10 grand, you're starting, try the micro just to get the confidence going. You got it. Thanks, Megan. Cheers. All right, GBP USD. Right, yeah, it's in the short zone. No problem there. It's below the moving average, except this guy here, the major ones below, sell zone. Pound's bit weak. Fundamentally is a bit weak as well. Weekly, what's this nonsense? Get this out of the way. Okay, on the weekly, clearly on top of it, in the weak zone, all of them. Now we can try the 4 hour. It's in the middle zone. It's the neutral zone between the 200 and the 50. So it's the neutral, and it's come down to a bit of support in the 4 hour. Right. So what is the name of the game? Purely on the chart reading, technically, the name of the game is downside. Clearly the trend is down, and clearly the pound's a bit weak and the dollar's a bit stronger. So clearly that looks very much like a short. So what's the hesitation? The only hesitation, I'm going to be quite honest, guys, you might disagree. Maybe I'm being an old woman here. I don't know. Nothing wrong with old women before gets upset now. But maybe I'm being a bit of a club wuss. But I'm just worried having another trade out in the dollar with major fundamentals coming up. It may work out where you're missing out, and it was a fantastic trade in your favor, but then it might not. So if you do like the downside, which I do see and agree with, go for it. Make sure you have comfortable volumes that if it does go pear-shaped, your finances can handle it. Okay. Hope again that's all clear. Mariping and Company. All clear? Emotional, something for nothing. Went to build Rome in a day, going in far too big of volumes, astronomical risk to make an enormous profit normally ends up in tears. Okay, just bear that in mind. Rather build properly than build too quick, or like a house of cards that'll be blown down. I'm going, Percy, to wait on this one. I've already got $1 open. That's the Aussie dollar. I'm still in that as a sell. I'm not even take the NZD, although I do like the trade. I'm just circumspect having two, never mind $3 trades open with the fund is coming out. That's just me. But I like them all as shorts. Yeah. What is the level? If you want to short it, for sure. Absolute pleasure. Yeah, for sure. As long as you're aware. That's all I want to do. Be aware. I don't mind you arriving 150 and 120 zone, as long as you're aware you're doing 150. If you think you're doing 90, that's a different ballgame. As my mother used to say years ago, you got to know the rules before you break them. Where put a fairly tight stop, maybe there. What's that say? To make it 1.2335. And see if that works. Not sure it'll work. We'll try it. 1.2185. Not sure it's going to scrape it, actually. Not quite. So you'd have to move a little bit lower to get too cute. There you are. So 120 Rand a micro. So what does that tell you? Number one, if you got less than 1,500 Rand, you haven't got enough money to take it. Number two, if you got more than 1,500 Rand and you got other trades open and you haven't got enough free margin, after you place the trade, don't take it. Number three, if you normally can afford maybe a 500 risk, maybe reduce your volume size because it is aggressive because of the fundamentals. That's the way you should be looking at it. Otherwise, I'm fine with it. Okay. All good? There you are if you want it. Okay, guys, happy? Good stuff. Oh, sorry, I see what you mean. Good to short it. I suppose if you like it, you can go at market. I mean, it might pop up and down. I don't know where the next pip's coming from. Nobody does. If you might go a bit high, you get a better price. That's your choice. But market or whatever, that's if you like it. Okay. There you are. I'm going to knock it off now. If a couple people say they like it, I'll write it down with pleasure. Just saying. I'm just making sure you're all aware. of what's going on. And if you do take it, it flies off. Everyone's going to be annoyed they didn't take it. Well, we only know in hindsight. All good? Okay. Any other questions? Second question earlier on, it was Megan. Anybody else? Any questions? Say, ask, and then I can help you. Any other questions, guys? Bit quiet in the trading at the moment with all these funny things going on out there. So we can discuss other matters and clarify a few things for you. Let's make use of this trading room. If you've been doing it for a while, I might learn from you. You might ask questions. That's a good point. We can all learn from that. I didn't know that. Hey, remember, Chris, that time I did about the margin on there. It gives you exactly what your margin is. So you know by clicking on there what your margin is, and then you know that you're going to have enough free margin after the trade if you go for it. Those things, so some good stuff can be learned here without me doing the training, as in taking away stock market college's job, basically, but certainly clarifying and answering. I tell you, you've all got the calculator. A lot of guys say, I've only got a phone. Well, first of all, you are limited with a phone. It's a good backup, but to try and trade off it, as in doing strategies, is a bit limiting. You can place an order, modify, close it, and it's nice in your back pocket when you're out and about if you've got a router. But to trade off it, as in strategy-wise, a bit limiting. But there, being as it may, we don't have a calculator for the phone. You'd have to go to the App Store and search around there. I know they've got a one or two. I don't know which one. I haven't looked for a long time, but I know they've got one or two. I think they're free as well. Might be bombarded with adverts, but do have them there if you only got a phone. But like I say, again, I'll say you need the right equipment, you need the knowledge, and you need the finance, the capital to make a successful business work. And this is no different. Okay, I'm going to knock that off now. If you haven't got it, well, I'll put it back on again. Right. Anything else? One we can keep an eye on, but we missed it. Bloody hell. I thought it was going to bounce this. I was hoping to get this, and I thought it might bounce. It started to bounce yesterday. If we get up there, I think I missed it this morning, actually. I want to sell that down again from these levels. So if it doesn't break through and it bounces up again, we'll sell it down again. And the other one's got to pull back. We missed this one as well. If we can pull back again, we can try it. But my problem is don't sell the pullback. It might not pull back. It's a very strong the Swiss franc against the yen, but if it pulls back, we might be able to buy it. Just bear in mind the dollar yen. They've already had government, Bank of Japan intervention, the government, Japanese government intervention, and $150. Sorry, yen, yen to the dollar. So if it starts getting 149, 60, 70, be a little bit careful of shorting the yen, because the intervention to strengthen it might knock you, as it happened down here. See what happened there? That was government intervention, the Bank of Japan government intervention. And look, it dropped on that intervention quite drastically over that period of time. 400 pips. You get the point. And that's nothing to do with anything else but large, but very, very large position, working to billions. The government actually bought the yen. But look, even they can't really interfere in long term. Sooner that's cost them hundreds of billions, well, hundreds, but certainly many billions of dollars, the government. And look, it's still starting moving back up again. That's how powerful the trend and how large the international forex market is. Even about what's it, the fourth, is it? Or is it the fifth now? Number one's America, China. I think it's Japan third, and then fourth, India, and then fifth, I think, is UK, somewhere around about that. But no, Germany, and then the UK. So Germany's now fifth, sixth, UK. Now, the point is, even the third biggest in the world, this is what we're dealing with, so people understand, can push it at a certain level, but then it goes back with the trend. So just bear in mind, we're talking, this is an astronomically large market worldwide. Just bear that in mind, okay? Okay, any questions, guys? Are we good? And don't try and just sell it now because it's a bit high. This is holding. Every time to break up, the seller come, break up, sellers come in right at resistance, sell it down for a pullback. If this was the Japanese yen against the Swiss franc, we got ourselves a trade. We got ourselves a convoy. But because one is stronger than the other, I don't know how far it's going to pull back before it maybe break through. So we don't know it's going to break through. I'm not sure the extent of the pullback. So either wait for a pullback, hopefully come back here somewhere to buy it, or a breakthrough, and then see if we can find a decent risk reward. Just be careful about selling the Swiss franc at any currency, particularly against a weak currency that Japanese is. And also remember, bank intervention could screw the whole system up. So keep an eye on that 150 yen to the dollar mark. Okay, it happened last time, might happen again. Why don't they raise interest rates, which will strengthen their currency? Because they got so much debt, the last thing they want to do is increase the debt by having higher interest rates. They're exporting nation. It does them a favor having a weak yen. We get that, but unfortunately, they're import of oil, and it's costing them a blue fortune at these dollar prices in their weak yen to buy a barrel of oil, which is really hurting them hard. Okay, it's like China. Hope that's all clear. Nothing big to it, just a bit of general knowledge there for you, if you weren't all aware of it. Okay. Any other questions, ladies and gentlemen? Gold. Okay. Stocks everything else is doing. Quickly check it. Not much. No surprise there. Pretty quiet. Okay, gold. All right. Yeah, looks like that might be stopped out, that one. Well, as you say, the yields have come off. Yields more than the dollar will affect gold, and the yields have come off. Dollar's sort of a bit iffy, but I think it'll strengthen up. But anyway, a lot of fear factors built into the price of gold at the moment. Any escalation, the attack on Israel, any more political fallout will probably increase gold a bit further upwards. Any calming down of that nature, any good news coming out in the PPI, CPI, which increase or rather, increases the yields, strengthens the dollar, will have a negative effect on gold. You take you take your pick. You take your chance if you want to trade gold right now. I'm not going to do either. And at this stage of the game, I don't think the technicals will make a lot of difference. They'll help. It tells you what the buyers and sellers are doing, but it's outside the technical factors. It's fundamental factors driving it, either up or down the moment. And they're pretty difficult to interpret at the moment, in my opinion. So you if you flip your coin, takes your chance. You want to trade gold. I'm not going to. Yeah, at the moment, I probably think if you're not in Nasdaq, leave it alone. But if you must go into it, I'm erring on the short side, to be honest. You okay with that, Gerard? Come back to if you want. Have a quick look at the NAS. Yeah, it's gone to buy zone. Technically speaking, it looks like a buy, but I think it's getting to the stage where it's gone up quite a lot the last 2 or 3 days. Then he's more than 700 pips. I think it could be a chance for a pullback. We've got a lot of issues out there, not just the pullback issues, but a lot of issues out there that I think could still come back and bite. So despite the reverence for tech stocks, which are still there, I still think we can get some downside. So probably best just to stay on the sidelines for the moment. But I'm personally leaning towards a break back down again. Okay, fine. Thanks, Keller. Yeah, I'm personally, for those reasons more than anything else, I think it could be a break back down, but I'm not confident enough either way to try and get too cute. I have taken a bit of a short on it, but only small for my purposes. Same with the Dow. But if you're in it, hold it. But I'm not sure I'll be joining out even at a better price. I think just be a little bit circumspect on the indices for the next couple of days. Yeah, I think most of them are going to be fairly low volume trading for those reasons. I think most of them dollar rates can be fairly flat, Madeira. That doesn't surprise me. That does make rational sense. Okay. I think it'll work out, but sometimes like you need patience. There are times you can have too many trades you know what to do with. Other times you can't find a trade for all the tea in China. You know what I mean? It happens. The 10-year note it's a bond. I mean, you get the treasury bills short term, like a year or so or less, slightly more. And then you get, I think it's the 3, 7, and 10-year note. And then you get the 15, 30-year bond. It's borrowing money. They're just different terminations. For longer term bond, medium to long term is notes, and treasury bills for interest rate short term. Bottom line is the bond or the borrowing or the paper, if you like, moves an exact opposite, not slightly, exact opposite to the yields. Yields go up, the value of the bond will clearly go down, and vice versa. So I'm not too worried about going to the bonds particularly. I'm worried more about the yields. Why are we interested in the yields? Because if the yields or the interest rate goes up, Solly and company, I know a lot of you heard this before. Just bear with me, repeating again for people new to it. It's not that complicated. It won't take long. If interest rate yields means interest rate, if the returns on the paper or when your bank account, your savings account, go up, remember that takes no skill. We call it a no-brainer in the game. So if you can earn money, which is completely safe, no risk and no skill, why would you want to put something in which is risky and requires skill? There's no point. Will you come and work for me for 20 grand a month if you can stay at home and be paid 30 grand a month? Why would you do that? So the point I'm trying to make is the gold, we go in for speculatory areas to make a buck, but it provides no dividend or interest. So if you're going to go into the yields, sorry, if you're going to go into gold and the yields go up, it makes gold more tarnished, less attractive. So that's why we concentrate on the yields. The same for the stock market, because most of the people going to stock market long term, they're after dividends. But if they can earn decent money on interest rates, why would they battle the stock market? If you can earn a fat living on your savings by putting it in the bank on interest rate, why would you take any risk? What's the point? The point is why you are taking risks and trying to find another way to make money, because the returns you're getting in the bank on the capital you got is not enough to retire on and live off. You see what I'm getting with? So that's why they work in opposite direction. So you look at the yields as they come off, they'll have a positive effect on the markets, not the forex market. I'm talking about the stock market and the indices and gold. If they go up, the opposite will occur. So they're what's called inversely proportional. What is the fly in the ointment with gold? It's the fact that is the fear factor involved, and sometimes the yields can come off, and so will, the yields might go up, right? And gold still goes up. You think, why is that? Maybe a bomb's been dropped somewhere, like in Israel or I don't know, wherever. Fear factor comes in, political fear factor comes in. A lot of people will suddenly rush to gold. Never mind whether the yields are going up or not, or the dollar's strengthening. So dollar strength, yield strength on those two things I printed there. You look for negativity on gold on the stock market and the indices, and vice versa. Hope that is all clear. Good. And it's not solid. It's not that it's quite common sense. That's why I use something familiar to you. Solly, if I offered you a job for less money you're getting by doing nothing at all, staying at home, having a bit of a jaw, and you took that job, why would you do that? You know what I mean? It doesn't make sense. Unless you love me so much, you'd love working for me for less you get for not working for me. But there's not very few of them people around will actually do that. But you get my point. I make a bit of humor of it to get the point behind it. That's the situation we got now in the West, where minimum wages are so high, the dole for not working is so high, government handouts so high. A lot of the unskilled jobs now, the people who've got citizenship aren't going to take, because cleaning a bloody latrine or flipping a hamburger and going to work and all the hassles and press that goes with it, for less they can have half a dozen kids and live off the sodding dole. That's why those sort of jobs are taken by illegals. You get it? And poor uneducated people going over there, enticed by nice little dreams. And when they get there, they haven't got the skills to offer anything, and they end up doing those jobs that the local yokels don't want to do. I mean, a lot of scams come out. We desperately need you builders. We'll pay you some ridiculous amount of money. We'll even subsidize your airfare. You only got to pay half. Where's the scam? The half airfare you paid. Because believe me, they got tons of unskilled labor there, all flooding across. They ain't going to pay good money to get another one across. If you want to get across another place, you've got to give them something they don't have. You've got to offer them something. If you don't, you're going to be in a difficult situation. The same with anything in life. Common sense. And that's what's happening, unfortunately, in the world at the moment. I mean, people come across the border in South Africa, same going across the Rio Grande in America. They haven't got much to offer. They're sold the idea they will get, and then they find it's not quite the dream, And common sense says, I've got much to offer them. I'm not going to get much in return. That'd be the way out of those kind of scams. Okay. Okay, Pete, you got that solid, that's fine. Okay, Gerard, good stuff, mate. Hope to catch you again soon. Yeah, we've got another half an hour to go, so let's see if we can add some value. If we can't get any phenomenal trades, maybe we can get some educational aspects going. Not training like the classes, not pinching their job, but overall ideas, concepts, etc. Yeah, don't overexpose. Understand your leverage trading, which is high risk, high return. Know how to find what the margin is, and know what margin means, and know what exposure means. For instance, if you go into let's say 100-to-1 leverage, maybe 100 rand comes out your account, but 100 times that is your exposure. Make it 1,000 rand comes out your account, it means your exposure is 100,000 rand. You've got to know the implications of that. So we can discuss those sort of things. It's quiet, unless most of the people already know that, and I certainly want to bore you with it. But you shouldn't be trading if you don't know those concepts. And if you still go to class, you still can't get it. I'm going to be honest with you, you should ask whether trading is going to be okay for you, because you're probably going to trip up. It's not quite like the Instagram says, get a single, push a button, put squat money in, and away you go. No, it's not. I wish it was as easy as that. It'd be wonderful. Anyone disagree with me there? Maybe I'm being harsh. What do you think, guys? Uh-oh, connect's a bit unstable. I'm going to lose it now. What do you think, guys? Do you think you can make it with very little money, very little knowledge? What do you guys think? Maybe I'm being harsh. I'd love you to win. What do you think, Reno? What do you think, Madiri? If you guys have been around a bit, Sam, Paul, Gertrude, some guys have done it before. What do you think? What do you think is needed to be a successful trader? In other words, to make some money. There's a good question, guys. What do you think is required to be a successful trader? Knowledge, good enough? Yep, you can certainly make it with knowledge. You certainly battle to make it without knowledge. I can safely say that, yeah. What about the right equipment? It's no good having knowledge if you can't place a trade because you don't know how to place a trade, or your laptop has disappeared, or you haven't got internet. So you need that as well. Trading skills, that's knowledge, absolutely. Never giving up and risk management. I like that, Ebenezer. I like that. Well, last times we give up. If you know what I mean, if you fail something 100 times, you might have to question, is this for you? You know what I mean? but within reason, don't quit. I agree with you. And risk management, absolutely. I'm afraid it's true, my dear. I wish it was otherwise, because the majority of people on the planet have extremely limited capital. Humankind invented the financial system to benefit a tiny, tiny percentage. But unfortunately, that's the way it is. Yeah. 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 You say once you know the rules inside out, you can break them a couple of times, but the initial stage is rather stick with them. Yeah. Knowledge, patience, good cap, and discipline's another one I'm looking for. Yeah. Talking to me, I'm not the world's most disciplined, but I can tell you from hard experience, guys, the lack of discipline is usually come back and kick me. But yeah, you need capital and you will need discipline. That's a very good point there. You got the knowledge and you got the fantastic internet, a fantastic computer, and you got a big balance, but you haven't got the discipline. That you could certainly reduce that balance pretty quickly. Absolutely. Sorry, I want to read that out because a couple things I want to develop on that. With knowledge and proper equipment, I'm pretty sure I'll never go broke. Now, one of the major parts of this particular product, if you get the grip of it, is just that. Remember, it's totally portable. I've got a little workstation about a meter, maybe a meter and a half wide, and a meter half, about 1 meter deep. That's all I've got. I've got a couple of, well, I've got a monitor. Well, actually, I use my TV as a monitor, by the way, as a laptop, and I've got an internet connection, and it's totally portable. I'm going to Joburg for a bit of a get together, so I'm going to take my business with me. Can you imagine picking up and putting the boot your Kentucky Fried Chicken or your Spur business or your Nando's business? No. So number one, it's totally portable. Number two, yeah, you do need a bit of capital. You don't need horrendous. You want to buy a Kentucky Fried Chicken in a good area, it's going to cost you a few million. Don't know how much. It's going to cost a lot. You might have it. Or you got to borrow the money. Now you're paying all the interest. Number three, you're bedridden. You're getting old. It's not physical work here. It's pressing a sodding button. So you can still do it as long as your mind's alive, and you can do it for the rest of your life. No one's going to say to you, you're 90 years of age, you're too old. No, if you're still mentally alert at 90, even though you can't get out of bed, you can still do it. I mean, my bed and to my work stage is a couple of meters. That's my distance to work each day. So there's so many pros on it. That's why I'm glad Employee put it out. You won't go broke. However, to get to that stage, you do need to develop those skills, like I mentioned. And that's the problem. Yeah, I know you saw that picture of that a heart surgeon make a lot of money, but he did a bit of graft to get to that place where he earned that kind of money. And this is the grind part. But most people want to get from A to Z immediately. They want to be able to play the piano in 5 minutes. They want to be a pilot after 5 minutes. You know what I mean? And that's where they usually come a cropper. A trading gap, in my perspective, if you know what you're doing, it's important to never stop using proper risk management. Absolutely vital. Remember, not get greedy, it'll humble you. I couldn't agree more. I've been pushing that so hard. Risk management vital. Do you know, ever heard of Aesop fable, the tortoise and the hare? The tortoise is much slower than the hare, but the tortoise won because he kept at it. He was what you call it, consistent. The faster hare kept stopping, chatting to its mates or whatever, and in the end, the tortoise beat him. So the ups and downs of the overexposed, no risk management whatsoever. Here today, zero tomorrow. Nope. So yeah, absolutely, be consistent, and it might take you 2 years to get there, but you got to, or maybe 3 or 4, but you're going to get there. The guys going up and down 4 years time are still the same because they're going up and down or broke. You know what I mean? Absolutely, very important. Knowledge of the market and the platform. You've got to know how to operate the platform. That'd be quite Clinton standard. I'm sure I'll not, but at least be able to know what a pending order is and the difference. Absolutely. And a trading gap. Well, a trading gap, what happens is, let's say the market closes at the weekend on the euro dollar at that price here, okay, where it is now. And shall we say it opens up on midnight Sunday, first thing Monday morning, down here. It opens up down there. The difference is the give me the gap. If it goes down, goes up again, it normally goes back up to close that gap down the line. That's all that means. Doesn't always happen. Nothing always 100% in this business happens, but that's a likely percentage. That's what it means. Okay, so on a share opens up as 3, close, I think it's about 10, 10:30, whatever it is. Let's say what's today now? It's Wednesday. Let's say the share price of F-stop, that's a share, that's Ford, closes tonight at $12.20. If it opens up on where we're now Thursday after at 3:30 at 12 or 12.40 or something, $12.4 or $12 on the dot, the difference on the opening would be the gap. And that's what that means. Are you good with that, Ebenezer? Clear enough? Why is it useful? Because often when you see a gap and it often goes back and it closes that gap. So it gives you trading opportunities. That's why we even mention, otherwise we wouldn't worry about it. But anyway, going back to what the other guys were writing, please, guys, you're just starting. That's experienced guys who are, those guys have done it. Take it on board. There's 4 or 5 very salient points there. Take a note of it and put that on board. If you're going with no knowledge, no money, equipment, no idea, and you want to be successful by tomorrow morning, because you saw some guy on Instagram prancing around with a smart suit in front of Ferrari. That's all pose, all BS anyway. Trust me, he might have the suit, he won't have the Ferrari. Guys who got Ferraris won't be, they've got better things to do like that. That is unfortunately snake oil style stuff. That's people buying a dream with no understanding of reality. You need to achieve your dreams by having some perspective on reality. Very important. How do you balance tech and fundamental trading? Where does one get news? Okay, that's also a very good point. Right. Okay, Emperor is also a good point. We'll come back to that. Fundamentals really what drives markets, if you like. You know what I mean? Let's say Ford's a company that produces cars. We can technically trade it. Some forget what is the purpose of business behind it. It's actually producing cars. So if it doesn't produce cars, doesn't matter what the technicals say, it's going to go out of business. If it produces more cars than expected and more people buy it than expected, then the technicals say it's going to get a jump in the share price. However, the problem is people who don't understand the fact that they wait for the fundamental to be released and they act on it. By the time the news is out, it's too late. It's discounted into the market. Okay, so what is a fundamental? What's the point behind the fundamentals? Be aware there could be a release. I'll give an example. Let's just pretend in a 10 or make it half an hour's time, Ford is going to have a release on its profit or loss figures on its annual audit coming out in half an hour's time. It's not a good idea to buy or sell Ford at the moment because you don't know it's going to be good or bad. If you do, go for it. Insider trading, or you think it will, go for it. But if you don't know, you don't know. So you say, right, it's in the short zone here. I'm on the daily chart. It looks like a sell, so I'm going to take a sell on Ford. And the profit comes out way above what's expected. That won't count for, excuse my language, won't count for shit. That will shoot up. Do you get the idea? Or it's in the buy zone and you technically correct, you bought it, stop down here, TP up there. Nothing wrong with that. That's all fine. All your indicators are oversold, blah, blah, blah. All that's fine. Then they found out the profit came out, it was a profit warning. They didn't sell as much as they thought was going to happen. The foundation of their business looks a bit shaky. What's going to happen to that share price? Bang. That's why you have to be aware of them. But once that news is out, don't get cute because that will immediately be reacted to immediately. And remember, you get the news after the big institutions get it. The news release, and most of the institutions control the news output anyway. So who are they going to let know first? Their own guys before they release it to you guys. So, once you get it, the big boys have already put their $1 million trades in anyway. So you're just chasing it after. In fact, they're probably getting out when you guys receive it, but want to start getting in to chase it. Don't think there's something for nothing here. Don't get cute on that. The technicals are purely there for what we call a trading days. When there's a trending day is the big fundamentals coming out like today and tomorrow. Their trending days can affect the move of the market from a fundamental reason. A trading day is when there's no big fundamentals coming out. What we're using is purely what we call technicals. What are technicals? Watching what the buyers and sellers are doing. If the buyers are in command, look like the buyers are doing stuff, then you want to be going with the buyers. The sellers, then you want to go with the sellers. If it's going neither up or down, if you've got a decent range between the two and it's sideways, you can look at range trading if you got the time. If you're doing other things, you haven't got the time for it, don't do it. Or you just sit it out and wait till you find a simple instrument, whatever you like to call them, gives you a pull back to a support level like the floor, and you want to buy it. You see a confirmed bounce, you buy it up, and then you put the stop loss below the floor, and you look at maybe the resistance or just below the resistance of the ceiling, and you take the trade based on what the buyers and sellers are doing. But that will be overcome if a major fundamental release comes out. That's what I'm going on about CPI and PPI, because they're important fundamental releases. We don't know what the darts will be, and if we did, we don't know what the reaction will be, so we don't want to get cute on that aspect. You might get lucky, but it might not. If you're a lucky guy, take a trade. If you're not, you don't feel that lucky, don't, because it could come back and bite. Is that all clear, guys? Not just for Nicodemus. It's a great question, by the way. Thank you. It's a valuable question. Are we all clear on that? I just want to make that very, very, very clear. No, I use not some of the fundamental confirmation. I use the candlestick for confirmation. The candlestick tell me what the buy and sell are doing. It's up here now, right? Sorry, it's up here now. It's come back all the way down. We don't buy it there. We see the bounce. It's bouncing there nicely. The candlestick, whether it might be an hour or longer, I don't know. It depends on the volatility. Might confirm a buy there. Put the stop down here somewhere, TP up there, and away you go. That's why we use them. Okay. That's what I'm trying to itemize. It's what buyers and sellers are doing. And so you understand what's behind the scenes, not just a green or red line jumping around. You know what I mean? You can talk to double tops, not double tops, double bottoms as much as you like. But if the buyers do not respond to it, won't happen. So why do they respond to it a lot of the occasions without a major fundamental coming through? Because the low there and the high there is utterly patently sodding obvious. And when it's obvious to everybody, unless they're blind, it'll be reacted to. So it's, you see a big double bottom there, you sold short down here. What do you think you're going to do when you get there on the short? You're going to get out. Why are you going to get out? No other reason. Is because you can see previously there's quite a strong bloody floor there. You don't want to hang around for a bounce, your profit would be taken away. So what do? You exit. Well, if it's as obvious as that, well, most people, even not the cleverest guys in the world, will be seeing that, and they'll exit. What do you do when you exit a short position? You buy. That's why we got a short covering bounce. So the guys will then buy to get out. They're not essentially buyers coming in to buy it, it's buyers to get out. Get the bounce. We're getting a decent bounce. A lot of guys are going out. A lot of TPs are triggered there, bouncing it up. And then the buyer's saying, hang on, we're getting a bit of a bounce upwards here. I think I'll join the party. They might say, this guy's an experienced trader. I'm not that convinced in the sells. I'm going to buy, I'll stay away. But there's a hell of a lot of people out there who are not that experienced, will react on that emotion just to get on board, because the volumes of it will force that price up a little bit. Does that make sense? Becomes self-fulfilling. That make it clear, Nicodemus and company? Am I saying gobbledygook? Do you get my point behind it, the concept behind it? And don't get too much parallels by analysis either. You have all the indicators in the world behind you, but they're all lagging. And if suddenly, for some reason, the buyers like it and your indicators say sell, you're going to get caught with your trousers down. That's why risk management is important. Thank you, Nicodemus. Thanks for that. I'll take it as a compliment because I feel I'm not that clear. Thank you. And I hope I pronounced your name properly as well. Okay, so we can use a train for trying to get these sort of basic areas, but not exactly rocket science, up to speed. And it'll clarify some of the confusion, hopefully. And you are getting an occasion about 3-4 weeks ago. I think it was something to do with the pound. And one of the guys, not on today, it was a gift, I forget who it was anyway, asked me, what can we learn? Because we can learn from our mistakes. And it went wrong. What can we learn from it? And I was quite honest, I said absolutely nothing. That was pure emotional jumping around, made no sense to me, and it still doesn't make any sense. That's why care for your position size, because you're going to get extreme irrational movements, especially short term, because there's so much emotion involved in the short term. It's so transparent, the movement you face, people stare at it and react emotionally to it. And there's a very large amount of retail traders, which basically amateurs, if you, let's be honest with you, in it there. And collectively, there's so many of them that come up with a large figure collective of money, and often they get those emotional strategies can move the markets in rather strange areas. So just be sure, however likely that is, it could go pear-shaped just for crazy reasons. So be careful, don't go in too big. Okay, Anthony, yeah. Because it's nice to have retail traders on board. We've got millions of them. I don't know how many, about 50 to 100 million of them. But the problem is the large percentage of them are not that knowledgeable, very amateurish, and mostly basically emotional trades on strategy wise. And collectively, not on their own, you're not going to move, but collectively can up to a decent enough sum, move the market in some rather strange fashions. Remember, every time somebody gets out, it's a sell, or gets on a long, gets out on a short, it's a buy, gets out on a long, it's a sell. And without even new trades coming in, if it's not, it'll affect price action. Just bear that in mind. And remember, something like the GBP AUD is the first one came to mind. It doesn't really matter. I'm just showing that example. This is not Ford. It's a currency pair. This is the biggest of lot because money flows around the world. And this is very important. We've got to know behind the scenes is where people might value the pound, the free floating system, Aussie dollar, that specific case. And we need large amounts of people to buy up tranches of pounds or dollars. And the only way you can do it, you've got sellers. And that's where the speculatory trader comes in to give the counterparty risk and create liquidity in the market. So it's a vital part you play in this. There's a reason financially why it's being done. It's not just to say, God, I can't get a job now. I think I'll just go and get a signal and make some money. I don't know why that I'm doing, but that's all right. No, there's a financial purpose behind it. No, not today. No, only tomorrow. Read the banners. If you get a banner posted, it says no trading session. That's what it means. But there will be the one tomorrow. Yeah, 2 o'clock. Thank you, Solid. Thanks for asking the question to invite it. See, people don't ask the question. I don't know you don't know it, so I can't answer it. But you're inviting it when you're doing that, which is helpful. Thank you very much, Paul. And some of those comments earlier about what you need for the trading and the benefits, I've actually have to be, I was plain surprised how many people are so spot on. It gave me some hope, actually. I thought some really, really spot on comments there. Thank you very much. And it helped the newer guys because they could see it's not just me talking. Oh, he works for the company. He wants my money. No, it means for the trading expertise and success, those guys are doing it and they're getting the idea, which is good. And they're making progress. Rado, thank you. What about that? Thank you very much. Before we close, what should we use? Do you want to use the dollar again? Sorry, dollar, the euro again, or the yen again, or do you want the pound this time, or should we use the NZD or Aussie dollar? It's going to be Aussie, New Zealand, pound, or euro. Which you want to use against the dollar? Let's put it to the vote. Okay. No, we can't do the pound JPY. We're doing it's the CPI of the dollar. You can do gold if you like, if you want. If you want to do gold, it's $2 above and below. But I think I'll do a currency pair. Unless everyone wants to do gold, then I'll do gold. Not the GBP JPY. Oh, hang on. GBP JPY. Talk about a trade idea. I thought this one, I didn't mention it, I forgot to mention it. I think some downside to this for a range trade. Some guys got that. I didn't put it because not many people understand range trading and they might not understand the ups and downs, the pros and cons of it. So I didn't put my VIP and it wouldn't stand out to everybody. But I think there's a possibility of a range trade there. We'll use maybe the black line as a TP and just above the blue lines a stop loss if you want to risk that. But they're pretty even Stevens. It is pretty risky, but it's sort of a range trade by the by. But anyway, go back to the tomorrow. What I'm going to use. I've got the pound dollar as one, gold's another. Right. Any other takes? Euro dollar, going to be difficult now. Hang on. We're spreading it. I need a majority, guys. Euro dollar, pound dollar. Let's get a few more votes and I'll take the majority. There you are. And no, I think I'll be a dictator. I'll ask your opinion and go and do exactly what I want to do. I've decided I want to become a dictator. Just kidding. So we've got euro, pound, and gold. Any other on that? Got a smile for Ebenezer. Good stuff. Okay, we've got 200 pounds. The pounder is leading at the moment. Come on, guys. Coming up the last 4 furlongs, got pounder lead, and euro dollars coming on the hindsight there. Yeah. Work on my horse racing commentary, I think. Anybody else? Come on. Hope we're not going to get a dead even now. We're here till 12 o'clock. Actually, I've just got to go to the loo quickly. Excuse me a second. Start putting them down there. We'll tot up the winner. Okay, hang on. Not a smaller spread. The spread is the spread. We're talking about the difference between the with it 10 pips above or below. The spread's got nothing to do with it. Spread's the spread that's set by the company. It's finished. I'm trying to find who wants to dollar. The moment the dollar is leading by what? Should we do the euro dollar again then? Are you happy? If you want to do the pound, Nick, you can do it, Nick. You don't have to follow me. As long, but I'm just looking for what I'm going to use when I do the session tomorrow. But if you want to do the pound, same 80 around a micro, it's above and below. If you want to do 15 above and below, that's your choice. You want to do like a bit close, but it's like at this stage the euro just slightly ahead. So shall I do the euro dollar then? Are you happy with that, guy? Nicodemus won't be. North, but Sam, Ebenezer, and Paul happy with it. Should I do the euro dollar then? Yes. Those part took in this vote. Don't cry if you don't get your choice in. Happy with that? Euro them. Okay, guys. For that, Reno. Right. Well, class just about to finish. Yeah, it's 11 o'clock. Okay. All right, Reno. We'll do the euro dollar tomorrow. Good stuff. Okay, guys, great stuff. Thanks for your support. Thanks for bearing with me. You happy with that? Good man. Good, thank you, Nico. Hope you learned stuff. Thanks for bearing with me. And yeah, catch you tomorrow morning, 9:30, and of course, then the 2 o'clock session after that. And then Friday again will be 9:30 till 11 as normal. And then we just take it from there. Okay, great stuff. Hopefully happy trading. And hope the bloody fundamental today at least helps our NZD dollar. Cheers, guys. Thank you, Nico. Thanks everyone who assisted me, interacted, and hope we all learned from it. Brilliant. Thank you, guys. Bye-bye.